Mm. Good morning, good morning, good morning. That coffee is cold. Welcome back to DG Trades. This is not financial advice. Come on. This is financial opinions from a trader that's been doing this for 15 years. Welcome back to the channel. Thank you for our new subscribers here. And I want to go over some data sets first. We'll go over technical analysis on positions that I'm involved in. And really the sentiment overall that I'm seeing is kind of changing. I want to talk about, are we in a bear market? Is this a good opportunity to buy dips? And it all is relative to what type of trader you are. So keep that in mind when we're going over everything here, okay? If you're not sure what type of trader you are, then just be very careful in these markets. Right now, there's a lot of headwinds going on. People are ruminating now. It's not like full bull charge mode, okay? It's a time of reflection, and we gotta assess what exactly is going on in this world, and that's what you're seeing in the stock market. That's what you're seeing in the crypto space. We're gonna go over everything this morning, so I'm gonna chapter it up for everyone here. What portions of this interest you. If you're hardcore, you're gonna listen to this all. Love you. Weirdest reports ever on job numbers. November, what ended up happening, I think they were shooting for a top line of 400,000 new jobs, and it shot way under 200,000. But then it also showed that unemployment fell, which the data is like, WTF, what's going on here? People are screaming, this is rigged. This is here's what I think is happening. And first, let's watch this real quick.
The change in non-farm payrolls comes in only half the level we anticipated, 210,000. That's a real surprise, and that is going to cause some head scratching at the Fed. What do we do about that? The unemployment rate, though, dropped significantly, 4.2%, down from 4.6%. Let me quickly check here, because I suspect that the civilian labor force, it did rise by 594,000 people. So a lot of people going back into the labor force. The household survey shows over 1 million jobs, 1.1 million employed, where unemployment drops by 542,000. So you've got a good news story on the unemployment rate, but it doesn't match up with what's going on in the establishment survey. Again, 210,000.
Yeah, okay. So the unemployment rate falls to 4.2 versus 4.6, which is like record break. I mean, this hasn't happened for decades. However, we're only adding 210,000 jobs in November, which is lower than what was anticipated. So there's conflicting data there. So what really is happening is the world is changing. More and more people are quitting blue collar, white collar kind of job. Well, not maybe white collar, but more people are probably quitting their blue collar jobs, saying, we want higher wages. The market's going to have to pay higher wages. That is inflationary, because what's happening is things are getting more expensive. Wages have to increase to adjust that offset. But people are opting to find different routes of being employed, and most are starting to realize that they can make money on their own from home and in whatever capacity. So that number is the highest that has ever been. People are flocking to finding ways to making money on their own, which really they have to. Big mega corporations are pretty much sucking up all the mom and pop stores. They're pretty much all dead. Amazon's pretty much crushed everybody. Like if you're not working for Amazon, then you're going to have to figure out something inventive. You're going to have to figure out some way in which to make income, which people are starting to do. They're realizing that there is a guard change of the way people are being employed, and the numbers aren't picking that up. So that's what you're seeing here. So that's my explanation for it. That is my opinion. All right. So, it's very confusing for a lot of people. The market bounced pretty much on the news. I think it's kind of like a dead cat bounce. It's been shorted and shorted and shorted for a while. We hit on the S&P a level, which, is one of the lowest levels for a few months, and people just traded it up. Will it continue is a question. That's a good question. We're going to talk about that. Next data set. Today, crypto CEOs are going to testify before lawmakers, for this greater regulation. So that's a fear. That's why you're seeing Bitcoin drop. That's why you're seeing crypto drop. There's another fear. We just got over the Omicron fear. people realizing it's not as effective. Its potency is really low, but it's very transmissible. Okay, it's not nearly as bad as people thought. Another reason for that bounce. Another reason people traded the stock market up yesterday. Okay, will it hold? Probably deflate again. That's my opinion, because there's so many headwinds right now. Okay, that doesn't. I'm not painting the bearish scenario here. I'm not saying, oh, run, scream, get out. That already happened. Actually, that happened. It could happen more. Okay, we're going to talk about that. So, here's my opinion on what's going to happen today with the regulation is not a bad thing, by the way. Regulation is very bullish. There needs to be regulation in the crypto space. Okay, the more regulation there is, it could be overregulated. That's not good. That's bad. The infrastructure bill, I'm not going to get political, but by Biden and the Democrats not really inserting legislation that needs to be in there in terms of the wording. The wording's so vague. It's very draconian. They can take it however they want and shape it however they want to punish whoever they want. That's on purpose, by the way. That's on purpose, so that they can go in and take out whichever crypto they want. Will they do it? I don't think really it's the smartest thing for the U.S. to do after China basically abolished all crypto. The U.S. should mimic what China's doing, and they're not. They're going to embrace it in some form or capacity, and they're going to regulate it. They're going to regulate it terrible because they're the government. The government never does anything right. They're going to listen to these people. Half of them are like 60 plus years old, have no fucking idea what crypto is, and they're probably going to make some missteps. It's going to happen. That is opportunity going forward if you're a longer term trader. Okay, so again, when I talked about at the very beginning of the video what type of trader you are, keep that in mind. If you're a short term trader, you might want to take some of these headwinds and take a little bit risk off right now, because there's a lot of headwinds. Again, if this plays out where this does bounce and goes forward from here, because the odds are a little bit against you right now that's going to happen, then you get a big payoff. Okay. But that's not the type of trader I am. I'm not going full gung-ho like, oh yeah, I can't wait. Yeah, buy the shit out of this dip. It's going to go up. I'm going to push it all in. It is not the time to push all in right now. No, it is not. So anyhow, this is a nothing burger. They're going to go in there. A lot of old folks are going to scratch their heads figuring out what the fuck these guys are talking about. They're not going to have a clue. It's not their forte. And this is the reason why the government needs a complete revamp and rehaul, because the people in there right now have no fucking clue on what's going on in Revolution and DeFi. They have no idea. Okay. So yeah, you're going to see some type of sell-off. It's a tradable event. It might go down a little bit. We'll talk about the technical analysis on Bitcoin and other cryptos later, and the equities market. This was a neat little area here, because we're gonna hop into Bitcoin of what type of holder you are in terms of your class of Bitcoin holder, because I could wax on forever about Bitcoin and being a pristine asset. However, as volatile as it is, if you zoom out, okay, and you're looking at the macro picture of it all, then right now this is nothing that people are not accustomed to with Bitcoin. Okay, we went from 1 million to 10 million market cap to 100 million market cap to 1 billion market cap to 100 billion market cap to 1 trillion. Now we're, this is the thing about crypto. Okay, it's very volatile. So these are the different tranches. If you own 0.135 Bitcoin, you're in the top 5% of people holding Bitcoin. So $6,800 is the current amount, and you're in the top 5% of people holding Bitcoin. Now, what does that mean? Long term, that's like, wow, you're in the top 5% if you invest $6,800 right now at the price that it is right now. You're in the top 5% of Bitcoin holders, which is pretty amazing if you really think about that. Am I saying go out right now and get $6,800 worth of Bitcoin? No, I am not. I just find this really interesting. I'm aspiring to build up the chart. It's going to be a long time for me because I'm a broke ass, but it is an interesting chart to know where you're at in the pyramid of Bitcoin. Okay, as far as your tranche, your class of Bitcoin holder. So let's get into something else I saw here, which was a neat little theory done by a guy named Invest Answers I watch. Really cool. And he's trying to make sense of the pattern here in a bullish case scenario. And so what he's saying is what he's noticed, okay, over this time span is that we're hitting these $10,000 or thereabout floors. So back here, way back in July when we had our big sell-off, we saw this floor of 30,000. Then we saw a spike up for 86% for the next 46 days, come back down to test 40,000 support. Stayed there for a bit, and then boom, 3 months later, we're now at the 50,000 support level, or 49,000 he's saying is support. And you can see in the interim between the last floor, we went up 72%. Okay, so could this be another floor of 49,000 right now, and then it blasts up to somewhere, I think price predictions around the $80,000 region? Could. It could. Welcome to trading. That's the fun. We don't know. The headwinds suggest to me, and what's going on right now and people's thought processes, and people are really worried because the market's very toppy, that possibly we might not be hitting that number anytime soon. We could also see a cycle develop now that is much different than what we are used to seeing prior to these 4-year cycles of Bitcoin, where you see these parabolic spikes up and then a 4-year period of like a bear market, and then another and then another parabolic spike up. Like 2013 was a parabolic spike. We can go over this on the technical analysis. I can show you. So 2013 was a bull market, boom, parabolic. 2017, boom, parabolic. 2021, currently in, also parabolic. And people are like, hey, will this continue to be parabolic? Is this going to continue to be parabolic going forward into 2022? Is the cycle going to be different, or are we going to go back down to another, 4 years or so of a bear market? I think we're seeing something much different than we did in 2013 and 2017. What we're seeing now is institutional buying. What we're seeing is adoption. We're seeing something a lot different than we did in the prior 2 cycles. I think we will probably see a lengthening cycle. I think that, yes, we are probably in for some more hurt. But if you have a longer term view of Bitcoin, and I will show you on the technical analysis what just happened, something I called that did happen. It went down a lot more than I thought it was going to do. But I picked up some very, nicely low priced Bitcoin because of it. So we'll go over that in a second here. Also on the radar, Russia and America. I grew up in the 80s, like the whole Cold War, Reagan, tear down those walls, Gorbachev, I went through the whole thing, man. We had tests to get under our desks for a nuclear attack. That was fun. That was funny. You get under your desk, everything will be fine. I'll protect you from a nuclear strike from Russia. We had Star Wars, and everything was cool until Putin got in. Putin's really playing a game of chess, and he's a smart dude. But he's a ruthless guy. I don't agree with any of the politics there. Anything that's happening right there is a terrible place politically to live. Thank God I'm living here in the States. But what right now, this whole Ukraine invasion and Biden's sitting across from Putin, and they're having these talks, and Putin's going to play cat and mouse. He's just going to be like, everything's fine, everything's cool, and do the exact opposite of everything he says to the United States. It's just a typical fucking game that's always been played. It's now Russia and China a little bit, tighter together. It's troublesome. It's troublesome. This could be a big to the market. This could be a fucking giant match to some gasoline here if something serious happens to this. That would be very, very bad for a lot of people involved in the market. So I'm keeping an eye on this because it will be a big event if something is more serious from this. So again, it's a risk. It's a risk. Will it happen? Don't know. But it's definitely one of the reasons why the market's being discounted as it is, and it might have future discount. The Bank of Russia signals a bigger rate increase. So they're increasing. They see the inflation and they're increasing. And they're not concerned about their markets. Putin's just like, this is what we need to do to be more healthy as a country. We're going to hike the fucking rate. And as something America hasn't done, Powell is becoming less dovish and more like shit. Inflation is not transitory anymore. Inflation, something needs to happen. Tapering happens. The cost of credit is going to be back on the table for banks. It's not going to be easy to loan out money anymore to people because tapering's on the table, and because there's more risk involved with credit. It's a little bit riskier for these banks. Okay, so again, This is why we're seeing valuations coming down for stocks. This is why I think going forward, you're going to start seeing some discounting going on here. And, by how much, I'm not quite sure. I'm not getting super bearish, but I'm starting to look at these headwinds and I'm starting to say, like, what's tradable, right? What is tradable? How am I trading it? And we're going to talk about everything right now. On both sides of the spectrum, okay? Because that's what we do here. We're not moon boys. We're not like complete bear. Like we're gonna tear everything down, blood in the streets. Let's make money off of people's misery. We're gonna trade that middle. We're gonna trade that middle. So let's talk about Bitcoin. Wow! If you guys watched the last video, I called this shit. I called it. It was hovering around here at 50, 58 or something around the video. And I said, yeah, we're probably going to descend down into this support line here. Now, this support line, there was nothing here, okay? I drew this and I said, we're probably going to hit the support. Boy, did we. We hit that support and we wicked down way below. Now, my order fired off here at 46. And I actually had an order and I was very happy to see at 43,000 that filled. So I'm sitting a little bit more pretty than some people. And if you've been following the channel here, you got yourself some cheap Bitcoin around 46. And I hope you got yourself some cheap Bitcoin in the low 40s. Could it go down more? Yes, guys. Yes. Here's the thing that people don't understand. People been calling $100,000 Bitcoin for a long time, and there's a lot of new players involved this year in Bitcoin. Over 50% of wallets right now that own Bitcoin are new Bitcoin holders. These people that are 50%, new Bitcoin holders that have just gotten involved this year are freaking out because some of them got in at 60 and they saw this long liquidation. What happened here, DG? What just happened? So this Elliott wave is now invalidated. So I have this Elliott wave here where, I was like, okay, we are going to tap down here. The market's going to, be resilient and we're going to boost off that. So this Elliott wave, bye-bye. Elliott wave invalidated. That Elliott wave is now off the table. If you're wondering what an Elliott wave is, it's psychology. It's basically like price action momentum based upon psychology. You can look it up on YouTube. It's something that traders do to analyze price action. Now that got invalidated. My Elliott wave got invalidated and it went down here, which tells me this is the support line that's going to matter. And I've said this before. You saw it go under the support line, and it was a great place to accumulate while everybody was freaked out around here on July 21st, but it was a different market then. There weren't as many headwinds then. Okay, so this is what I'm trying to get people to understand. Long-term trader, if you're a macro trader right now and you bought some Bitcoin like I did around 40,000, that's nice. When people see these blue lines, these are entries for orders for myself. Okay. People are like, Jesus, DG, why do you have, people were like, why do you have an order posted at 46, DG? Why is a limit order down there? It's never going to go to 46. It did. And it's a volatile thing, Bitcoin, right? It's very volatile. We've had a huge run up right now. There is no reason why it couldn't come down here. What's concerning me right now is a possible head and shoulders pattern. I do not want to see a head and shoulders develop here. That is something that is making me a little bit squeamish here. So a head and shoulders pattern is indicative of a downward movement. And I can almost see it here in the cards. Look, there's the left shoulder. There's the head. We saw the wick down here. If I start to see this develop, that is going to be a little bit worrisome to me. Now, how worrisome is it? Not worrisome. Why? Because I've prepared for something of this nature. Okay. So one of the things I want you guys to realize is this is why I have my orders set the way that I do. Look at where I have this next set order at. It is at 39,000. Okay. Long-term macro. Right? Sometimes bear and shoulders patterns do not complete, but I do believe if we continue this kind of bearish theme that we're seeing here, that we could see like a $39,000 Bitcoin. Why not? If we could all envision it at 100,000, why couldn't it go to 39? right? So I have it set here at the base of the shoulder area to pick up some more. If it breaks down, I have another order set here at 32,000. So I always have these stages where I'm buying. And if you've noticed the positions that I keep here, you will see these blue marks here. And these are areas where I'm putting in orders at. And it gives me a dollar cost average. Now, if it goes down below 32, watch out below. If that is the case and that is what happens, we are definitely going to go into a very multi-year bear run, and I will accumulate. If the taper goes forward and then they hike the rate and they bump it up, it's at 0%. If they say here we're adding on some percentage points to credit, and the Fed does that, you will definitely see this go down. And that is sort of in the cards right now. But why Bitcoin? Why Bitcoin? I'm going to say it is the digitization of energy. If you guys really want to get deep into the reason why I think Bitcoin for the macro, for the very long term, and I'm talking 10 years, I am not selling Bitcoin. Like we do trades all the time here, right? Bitcoin is something I'm going macro on. This is the trade for me with Bitcoin. It is long term profits. Everything that's traded outside of Bitcoin, I'll take some profits and I'll put the profits at these order points. That's where my money sits, at these order points. Now, I will say this. We're still seeing this bearish divergence play out, okay? But again, we are at, and this is a bull case scenario here. We are at some very low levels on the RSI. We are down in the 30s. Fear is on the table. And don't think that that's out of play. Don't think the bulls will not play that. We could tap right back off of this and then shoot up still. I'm still in the camp of that because I'm a contrarian. There's a lot of put activity right now on the stock market. There's a lot of people wanting to see this thing dump, right? But the contrarian in me still says, even with everything going on right now, because Bitcoin seems to be a large community of people that understand that it is a safe way for savings. People would say, "Oh, I can't believe you would say something like that." There's so many people right now. Look at the over 1 trillion. Well, it's under $1 trillion now, but I think it's $900 billion market cap. But look at the amount of people in Bitcoin for the very long term. It is a huge community of people that understand the value of a new system, paving the way for a new monetary system or a way to save purchasing power. That's basically what's happening. The digitization of energy. What does that mean? I'm getting a little long in the tooth here. Don't worry. We'll get to the next one. We'll get to the next technical analysis of Ethereum and all the others. But what I'm trying to get across to you guys is that there's Bitcoin and then there's everything else. If you really want to understand what Bitcoin is, go to my community tab on DGTRADES. I've got some videos in there that are excellent views. You've got many, many rich people, billionaires, Michael Saylor. You've got plenty of people on there in that community tab on DGTRADES talking about how they're in for the very long haul with Bitcoin. They're smarter than me, and I'm going to listen to it. There's a reason why they're investing. There's a reason why they're in it. There's a reason why it's being adopted. And we are at the very, very beginning of it. We are at the very beginning right now. So it is a safe place to keep your purchasing power against inflation. It is yours. You own it. No one can touch it. And again, I'm not gonna get in. Just if you want to get into the reasons why I'm in Bitcoin for the long term, go there. It's a wonderful read. It's a wonderful viewing. So anyhow, let's get off this. So again, buy orders set low. All right, that I have a reason why it's set low. Okay, there's a reason for it. You know, I was in way back here, and I didn't realize what it was I was holding back here. And I sold somewhere around here. Okay. Saw it bounce and go up, and now I'm late to the party. So I'm going back into it, realizing now the error of my ways. I should have never sold. Should have never sold. I'd be sitting pretty still. But even if it were to fall back down here, I have orders back down there. If it goes down below here, then I have to brace, hold my nose, and say, I believe in this, and I will buy lower. Okay. And yes, I've got it all the way down here to like 12,000. Yes, I do. You know, like this is the belief I have in this. It is revolutionary. It is something that is the path to financial freedom. And I absolutely believe it with all my heart and soul. And I think it is just going to continue to amass this adoption and value and safe store for purchasing power. And I will continue to buy it. And that's just long term. And because it's long term, I'm not going to trade it all over the fucking place. I'm just going to amass it. I'm going to hold it for 10 plus years. So that's how I'm looking at Bitcoin. Ethereum is still holding strong. Here we see it breaking this wedge to the upside. Whoa, Ethereum is holding strong. Even after that sell-off here, it did wick down. You see a lot of people liquidated. Why did it wick? Why did BTC and Ethereum wick? Well, a lot of leverage got into play here. A lot of new players, a lot of people using leverage got stopped out hard. And you saw this long wick down, but that wick is just showing the amount of buying. This wick shows the amount of buying, and Ethereum is looking so damn pretty right now. And it's breaking the top of this wedge. It's looking to me right now like it's bouncing off of this. It's better than Bitcoin right now. Like the chart reads better than Bitcoin right now. So Ethereum is looking pretty spicy right now. Again, it might come back down here. I did have an order fire off 36.57. If you guys were paying attention, these were my order points here. I was in it. Actually, I've been in this for a while. I was in at 37. I have been trading Ethereum. I sold it around 47 for $1,000 gain. I didn't make $1,000. I mean, 1,000-point gain. I made like $200-300 off of it. And then I bought back down here at 4,000, and then I bought back down here at 36. I'm sitting really pretty right now on Ethereum, and it's looking very nice to me right now. So Ethereum's one of the strongest dogs. You know, everything's getting shook out right now, and Ethereum's like, what? So Ethereum is looking pretty fucking strong to me right now. So Ethereum right now, I'd say, you know, maybe if you're, you know, gets back down here, the 4,100, 4,000, buy a little bit, and then again, do rinse, wash, repeat. 36. There you go. If you're new to the space, and just hold on, because I think it's going to blast off personally. That's again, my opinion. Sol, build a nice base here. I said, give it to me. I said, if you go under 200, give it to me. Give it to me. And I'm happy to see that it went under. Like, a lot of people are worried. Oh my God, it shot under 200. No. Bye. It is the alpha predator. We had a fake out here. It went above this channel, above this bearish trending down line. It went above and then got sold right off. You can see the different levels of support here from its initial start where it fired off. I've got your bands of support lines here. You can see it play and cascade a little bit down, but it is very strong here. Don't be fooled. 190 area down to one. I think I picked some more up at the 179 area when it did down here. I had a snipe zone of like the 179 to 183 area. I was buying. And again, if this, and then I'm going to hold off, I'm going to chill out. This fired off. Again, look at the buy point I set here, guys. 176. It fired. I hit it. I got it 176. I'm already up. It's 192. I'm already up from that point. Okay. This is why it's important to look at what it is I've got down here. Now, again, if shit goes to Shiola and everything gets shot to hell, I've got another buy order way down here at 137. Okay. There's a major support line down here at 137 is my initial entry. I traded it back up here around 243 and made a nice little chunk of change. And now I'm buying back down here anything under 200, like I said, 217 to 193 for newbies. That's an interesting area to be buying in. My opinion, not advice. And then if everything goes to hell in a handbasket, now I'm just holding off. Now I'm just gonna hold off a little bit. I'm gonna hold off just a touch. And if it goes down here, Sol's another one for me where long-term wise, I love it. Like I love the amount of adoption it has. Like I said, the total value locked right now on Solana is ridiculous. They're killing it. This is like Ethereum back in 2017. And that was a major spike. This could, again, opinion, this could be like easily $400 or $500 in this cycle. So an easy double in a few months' time, maybe even stretching out into the summer if the cycle does expand and it does something a little bit different than it did before, perhaps. There's some people calling for like, hey, if we don't have this parabolic spike anytime soon, this bear market's going to hit so hard, and it could play out like it did the other cycles. We could, and if that happens, have your stop set. If you're a short-term trader, again, what type of trader are you? Because altcoins can go down massive. We're talking 80, 90%. So definitely have your stops in. If you're a short-term trader, know where your stops are at. Set them. Stick with your plan. Okay, this is my plan. I'm trading SOL a little bit longer term because I do believe in it. I do think that it's like alpha predator. I do believe Solana has what it takes to be a major blockchain. Huge. It's already a huge blockchain. Low gas fees. So much adoption. People use it left and right now. It is being used for gaming platforms, for NFTs, for just the lower fees alone. People are loving it. You can stake it. There's so many things with Solana right now where people are like, yeah, but they're moving too fast. Well, yeah, sometimes that's a great thing. The fastest movers get the most adoption first, which is why this is killing ADA right now. Cardano's so fucking slow. We're going to get into Cardano. It's like my own personal, like, pound me in the face, what am I doing thing. We'll talk about that in a second. Luna, congratulations. You're fucking killing it in Luna right now. All my free coins that I got on the trade right now, doing very nicely. We're getting high up again. We're getting high up here. I want people to realize right now, if you've got profits on Luna and you haven't sold, maybe a touch right here, because you're getting high. You're getting high on the horse right now. Okay, your RSI is up pretty high. And it's a stable coin, and people are flocking to stable coins. And when people flock to UST, which is the stable coin for Luna, for Terra, right? Then on the opposite end of the trade, what ends up happening, that synergy that I was talking about, that's so cool with Luna, Terra, is that when people flock to the stable coin that's UST, what ends up happening is this token gets burned. So there's less of it. So this makes sense. This coin right now in an environment that is so like, and everybody doesn't know what the fuck is doing, there's a reason this motherfucker's spiking, because people are flocking to the safety of the stable coin, and that is burning Luna, and the supply is fluctuating like that. That's the interesting synergy that Luna has. When people flock to the UST, the Luna gets burned, and the burning of it makes it more scarce, and the scarcity drives the price up because there's less of it. I really love this token, but I think it is going to be at risk. Its counterpart, the UST, the stablecoin that is Terra, is at risk for regulation. So that is the one risk that you have to really worry about. But again, your MACD, you're seeing it fly high, but you are seeing momentum start to fade here. You're seeing the momentum starting to fade down as RSI is going up, or as the MACD is going up. You're seeing the momentum fade just a touch. It could still go. It go to the moon still from here. It could still go to 100 easy, but I'm chilling out. I'm sitting pretty on Luna. Everything I have in Luna right now is profit. It's all house's money right now. So, I was telling people to get back in here around this range when we were at 32, 36, and 43. Those were the ranges that I was telling people, like, hey, you might want to pick some up. Wow, we doubled on this one. It was a good trade. And it's playing out nicely. And again, if you haven't sold any, maybe just a touch and capture some profits. Put that cash, get that powder ready for something else that you're looking at. And congratulations. And I hope a lot of you profited off of that analysis. And, that is something where, it's great to have a channel where, when things do turn out right, I hope that, there's people out there that listened to my opinions and said, I'm going to be a big boy and I'm going to make my own decisions and trade Luna. And possibly some of you did. And if you did, congratulations. That's great. Now we've got some losers too. We're going to go over as well. Speaking of losers, okay, this Death Cross is now on the table. Death Cross. Death Cross. Oh no, we're all going to die. December 7th. Wow. To get this, Pearl Harbor. Anyhow, we saw this spike up on the Sunday swap news. Listen, here's the thing with Cardano, man. It's Charles. He's so polarizing. He speaks his mind, and I love it and I hate it. And he gets himself in trouble. But he's a really intelligent guy trying to build something that is as perfect as possible in terms of blockchain. Everybody calls it a ghost chain. Everybody's sold the shit out of this and back again. We were at 310 and now we are at $1.36. I think there could be more pain. We're going to go over the technical analysis. It could even go lower. Yes, it could. It could go down to 80 cents. It could go down there. Okay. But long-term hold for me now, because I'm stuck because I was an idiot and got faked out on this spike up. We'll look at that. But this Death Cross is probably going to weigh down Cardano's price action. But there's some good things with Cardano right now. It's not all bleak. It's not all desolate. And that is Sunday Swap. The Plutus backend is up. Sunday Swap is on it, and it's working. So we have a DEX here on Cardano, the first DEX really using Plutus backend on the testnet, and they're very transparent. Over 237,000 followers. There's a lot of good news coming from Sunday Swap. I have looked at it. I like the interface. There's a lot of improvements that can be made, but again, they're on the testnet. They are testing it. It's the whole reason for Plutus backend. It's not live on the blockchain yet. It will be. And when it is released, people that are involved in stake pools on Cardano that have staked their Cardano will start to get airdrops of Sunday Swap tokens. Great. Wonderful. Can offset my losses. And people that were involved in Meld, which is a financial token as well, that has ended, but also I will get airdrops in Meld. Hopefully that will help with all the losses in the future. They're not losses till you sell, so I haven't lost anything. But this is, again, a long-term macro trade hold for me. I do believe in the blockchain. I do believe what Charles is doing. I do believe he's going to try his best to make this one of the most advanced blockchains out there, even though right now people are screaming ghost chain. The ecosystem is there. It's just, it needs to get live and it needs to get moving. And we're not quite sure it's going to do this cycle, and it very well might not, which means a lot of pain. Short-term trader, be careful. Long-term macro, I'd say, hey, you're set. Just stake. And here's some technical analysis. This chart kills me. A long-term bullish trend line. You can see the break on that, baby. And this pattern, this is something to know. When I was a huge short, I used to short quite often, and I should have known this. But when you see this spike up and then kind of like this flat line here, traders love to short that shit, because this whole area here where it's flatlined, that is a loss of momentum. And Cardano is susceptible to that. There's areas where it has these kind of what I call these flat line areas, right? And it is susceptible to being shorted the shit out of. This one, it played out. It played out for the shorts, and they made lots of money on this one. And right here, I'm looking at this bearish downtrend line. I'm looking for some type of break. And like I said, anything in the 125 and below areas is screaming buy for me personally. And I bought a little bit. I bought a little bit more down here. I think it was a 120, 123. I picked some up. So Dollar cost averaging. My next order, you can see here's $1.01. $1.01. If it goes under that, I'm holding off. No more orders for me for a long time. I'm just going to hold off and stake the rest, and I will not look at it again. So, hopefully we can see some upward price movement with ADA. I don't know. I don't know right now. I think people that are short down here, it's a little dangerous, because the sentiment is so bad. The RSI, if you look, the RSI is literally at 34. It is so fucking low right now. The MACD is so fucking low right now that shorting right now, it's more dangerous. It's more risky to short right now than longing. And I think at this area, I personally think that you're going to see some buyers come in at this area, especially with the Sunday swap news, and you're starting to see things come online, come live December, January. Considering the market stays okay and we don't get in some crazy fucking Cold War, and considering the fact that we can stay somewhat stable in the market, you're probably going to see a lot of buyers in this region. But again, this is trading. This is trading. So you got to be very careful in how you treat this. I'm hurting. I'm bleeding right now on this position. And, I'm not attaching a lot of emotion to it. Interestingly enough, that's, as a trader, you just follow the patterns and you do the best that you can. And you have a plan, and you can see these points right here, are where I'm possibly considering selling portions of ADA back up to cover some of the losses that I have. And by the end of this, I'll still have a nice little bag, even after this 270, where do I have it? 280 area that I have set. So I've got an area at 187 where I'm going to sell a little chunk, 246 where I'm going to sell a little chunk, 280 where I'm going to sell a chunk if it ever reaches those areas. And by that time, I'll have offset some of those losses, and then I'll have profit. I'll have the house's money. So it could, but don't be fooled though. It could go lower. And if it does, I've got another buy at $1, and I might stick one around the 83 cent area, off of this fib level. We'll see, because at this point, you're getting into buy territory. In my opinion, this has been discounted to hell and back because nobody believes in it. Everybody thinks it's a ghost chain, and those, the contrarian in me loves it. I love it. I love that. I love it. AMP. We had another little spike back towards this wedge. What did I say? It tried. It failed. It's trying again. It's at 0.056. It went back down to this channel. Shit, I should have bought some more. I should have bought some more when it back down to this channel. This channel back down here, when I was talking about it, I said, oh, if it goes back down into this channel, fuck. But I did not say I was going to buy, and I should have said I should have bought. And I would have had a nice 30% bump up to the top and would have traded the fuck out of that. AMP is just a wonderful thing to trade. It's a token that's essentially tied to the Flexa network. It's a payment system. The Winklevoss twins are involved in this as kind of satellite investors. I think Gemini was one of the very first platforms that AMP was on. And, 5 cents seems to be, it's a collateral token. It's basically a collateral token. I've talked about AMP in the past. You want to look into AMP, go to the channel, type in AMP. I explain what AMP is. There's so much. We have been tracking this for months. You can see the movement on this. Again, be careful the markets here, okay? Because these types of altcoins, they go bad real fast, okay? And right now, the RSI is not so bad. It's halfway up here. We're in the 50 area. The MACD looks like it's starting to get juiced up. We're starting to see a little bit more movement here. It's not just flat line. We're starting to see some action here. It is a small down kind of movement that's connecting. Maybe going to spike up again. Not quite sure. We shall see. We shall follow. But we're looking at this bearish channel here, this bearish downtrend here, and we are looking at this area here, which is let me look here where I'm at, which is 0.052. So 0.052 to this wedge here, which would connect over in this area. We're now working off of this support line of 0.052. So 0.052, I'm saying hopefully that's the new support line, that is building support at 0.052. And we shall see. We shall see. If it can break over 6 and stick at 6, that would certainly be nice. It's trying to break out of this channel right here. This channel that has been trading in forever, which, you know, is this 0.041 to 0.052, and it looks to me like it has. Ever since the beginning of November, it's been, for the most part, trading up above this channel. That seems like it's a positive to me. It did slip back down into it briefly, twice here and here, and it bounced off of it nicely. We'll see if it continues to do so. And then I will say, hey, we're developing like a new line of support that is 1 penny higher than 0.041. Now it's 0.052. Hopefully it can stay there. And hopefully, again, you know, considering the markets, that everything stays relatively, you know, the sky is not falling mode. We just had an Omicron scare. Hopefully we don't have a Russia scare. You know, if we can keep stable, then perhaps you will see this spike up. And this, if it can get over this large bearish downtrending line here, that will just be like to the moon. That'll be to the moon. And it's going to probably take a while. It's probably going to take a while. I should just extend this out a little bit longer here. See here, boom, so we can see. And if we really look at an area of resistance that is continually plaguing AMP right now, it's this 0.0601. So it's at 6 cents that but it's fighting its way towards 6, it seems like. And if it can get over that, then it'll trade in this range, which is interesting. But I think what we're going to see is this play out where it's going to be from the 0.052 to this top of this wedge, and it'll probably play out inside this wedge for a little bit. And then again, that means we're going all the way till the end of February. If it plays out like that, who knows? It could break up if the markets decide they wake up and shrug off all the fear that's been going on, because there's a lot of fear in the market right now. There's a lot of fear. And again, there's a reason for it. We talked about at the very beginning of this video nearly an hour ago. Congratulations if you're still watching. You're glued in. Thank you. I appreciate you. Perhaps you're skipping around the video everywhere because I'm talking a lot, but I just want to get my views out there. I want to get my opinions out there talking about all these positions that I'm in. Now let's get into our equities. Here we go. Wow. What a bounce. What a bounce we had the other day. Thank Christ. We were talking about this line, this bullish line. We saw a bounce here. We saw a bounce here. Now we saw another bounce here. So it did exactly what I thought it would do. An order did click in at 13. That was my last order. I got the balls on the table now. The last order clicked in at 13. We're seeing again this popped up over the resistance line. I think I said at 1496, and you saw it sold under. You saw it sold under because now this is acting as a line of resistance. Okay, and I had an order around here, and it's going under it, and you might see it go back down under this. It might fight this line right to see if it's going to be support or resistance. It could very much be resistance with what we're seeing from the action of Bitcoin. Let's go back at Bitcoin because this is a miner. CleanSpark is a Bitcoin miner. They're going to report on December 14th. I'm hoping the numbers are great and they smash it because it will definitely help the stock regardless of Bitcoin price. We shall see. But it is refreshing to see that we did see a bounce off of that bullish trend line. Thank God, because it was just getting so damn ugly. And it's nice to see we had a little bounce up. And because I put a buy order down here, it helped out a bit. It helped out a bit. I'm not down nearly as bad as I was once before now that we're up here. But, you know, it could go back down. It could go back down. And, you know, I'm really starting to think like, if I'm trading Bitcoin for the macro, why wouldn't I not be trading CleanSpark for the macro? If you look at like Bitcoin miners and you really think about the Bitcoin's digitized energy and that the biggest benefactors of people that are going to make the most money off of Bitcoin are going to be Bitcoin miners, and essentially become the new energy sources. I mean, I would imagine the Bitcoin miners will end up buying energy companies. I mean, that's way far out in the timeline, right? But I could see that happening. I could really see that happening. Do some investigation into CleanSpark. I love the business model. I love what they're doing, mining 2 Bitcoin a day at $6,000 cost. You don't think they're banking? They're banking. So perhaps I'm going to go long-term view. If the market does tank and this does go down significantly, and I'm not going to pussyfoot around. I'm talking like 50% down from here. I'm talking like $7 a share. If you're not in for that pain and you're a short-term trader, set your stops out accordingly, okay? But like if I'm going to trade Bitcoin long-term macro, it would be stupid of me not to trade this long-term macro. So again, it's relative to the market that we're in right now. With all the headwinds and everything that I'm seeing right now, there's a very good chance that this bullish trend line could break. And then I have to ask myself the question, what do I want to do? Do you want to stop myself out? You know, I'm already down quite substantially on this position. I made money on the way up. I made money on the way up, and now on the money on the way that I've lost on the way down outweighs my gains from the up, only by about a couple $100. I mean, it's not a huge deal. I'm not going in baller on this one, but you know, this is something that I should consider. And again, we're at the lowest levels on the RSI that I've seen in a very long time. We've seen what happened in the past when these RSI levels get low. The MACD, again, you know, looking kind of bearish, but looking like we might see a pop. Yeah, I might hold on to this for the macro. I could easily see myself doing that. So again, what type of trader are you? How are you trading it? That's something really that you should look at. And then Invitae. Now, whoo doggy. Let me tell you, Invitae. Let's see if we can zoom in here. We've got a lot of lines down here. Okay. It hit my buy of 1534, and now we had a nice little pop up. Okay. Let's reset this chart. Okay. We were in at 21. Ouch. It went down here. I think I even snagged a little when it hit this trend line at 14, which is nice for me. I bought some at 15. I think I bought a couple shares down here at 14. I've got another buy order at 13. Kind of broke my own rule and bought a little bit. When I saw 14, I'm just like, come on, give me a fucking break. This is ridiculous. We can see a little bit of buying come in here. We're seeing something really nice happen. And again, this is genetics. Invitae is a genetic based company. They do genetic analysis, gene sequencing. They do a lot of like testing where they're saying, okay, like you are at risk for XYZ. Your DNA profile tells you that these are the things you have to worry about. It is an interesting company. Long term, we talked about this being a very long term trade. I do see this getting up to 30. Yes, I got in way too early. Timing is everything with trading. And here's the thing. When I saw this thing break, I need to take my own technical analysis, and look at the things that I'm drawing in here. But when I saw this break down here, I thought, hey, maybe we'll fill the gap up back to this wedge. And we went the complete opposite direction on this. All right. But again, I had a buy order here with a little taste at 21. My next buy order, a little bit bigger at 17. What was it? 1750. Then another buy order here at 1514. And then I bought a little bit at 14. And I've got another buy order set at 13. So it didn't trigger every one of my buy orders, thank God, like CleanSpark did. So I still have another order set at 1313. It did have a nice spike up about 10% yesterday, thank God. But now it's going to see, now these lines become resistance. So this is what I have to do. I have to change these lines to resistance because we've broken under these lines. And now what we have to do is we have to paint them accordingly. We have to make these resistance lines. Let's see here. Just pardon me while I change the colors here. I don't like when this happens, but this is part of the fun here. So now support, we're seeing support around 1520. I did layer in more orders. Again, we're in a sector right now that is far out, far forward DNA, and this could take a while. But like, you know, I think my cost average now is around 16-ish, 16 and change. I think I'm 1639. So I'm actually up on this position right now because of my dollar cost averaging. Not by much. No, actually, no. I'm still down on this. I think I'm 1734. If my buy order clicks at 1313, I will be down at like 1639, which would actually mean that I would be up on the position, but that buy order did not click yet. So I think I'm at like 1734. So I'm not nearly as far down as I was when we were hitting these, you know, all-time lows here at 1464. And some people probably bailed. This is why I have a plan. This is, you know, this is why it's so important to have a plan when you trade. This is why I map it out, my trades, because I look at this data, and I'm not attached emotionally to these downtrends, to these swings down. It lets me just kind of like soak it all in without having the emotional like because I understand what trade I'm getting into. I understand the company that I'm getting into. I understand where I'm pushing my orders in at. I'm understanding where my overall average will be, all said and done at every stage of this trade. Because I'm doing this, I didn't freak out and sell at 14, and I got this nice pop up to 1682. And so it's a little relief. This is like a little relief bounce. What's going on? Will it continue? I don't know, guys. A lot of headwinds right now. Possibly a time to take some risk off for some people that are short-term traders, and for the long-term minded like myself on some of these trades. Not every one of these trades, by the way. But for the long-term macro trader, I would say, you know, just buckle up. Buckle up. And you know, make sure if you're wholehearted, balls all committed in, and every dollar you have, you're not trading right. You're not trading right. You always have to have some powder on the side to initiate, to trigger for buy orders. If you do not have any cash on the side and you are all 100% committed right now, you're not trading correctly. You're not doing it right. Take some risk off. Look at some winners. If you got winners right now, congratulations. Take some off the table. Get some more powder ready to go. This is what is important. Your cash position has to be, right? At any point in time, when I trade, this is what I do. But I always make sure I have like around 20% in cash. I always make sure that I have cash at the go. 20% cash position. If my cash position drops below 20%, there better be a goddamn good reason why it's below 20%. So I will always have like a 20% cash position so that I can apply it towards something. And if I apply it towards something, I better have a time horizon that can get me back towards a 20% cash position quick. Okay? So that is how you are to look at a lot of these trades, in my opinion. Have yourself a pretty decent amount of cash on the side to commit on your trades, and take your profits when you have the profits. If you have the profits right now, trim some. You don't have to sell all of it. Just trim a little bit of it. Trim it, take some, put it back in your cash, buy when discounts are there. Well, I mean, we're pretty discounted right now. We could go discounted a hell of a lot lower, but that is the reason why you should have 20% cash on the sidelines and a plan for anything that you're willing to trade. I'm at the maximum level right now of the amount of positions that I have. Like, I start getting around 10 positions, it gets too much for me. That's me. I can't get into like too much more than this right now. You know, I'll talk about other things that look interesting to me, but I probably won't be picking up any other positions because I have too many right now. I am looking at Tilray, which is a pot distributor and manufacturer and grower. So Tilray is looking interesting to me below $10. That's something that's interesting. I possibly will talk about that on the next video. And I'm also looking at Robinhood because Robinhood has been pummeled. I like stocks that have been pummeled and discounted to the point where people have forgotten about it because those are your bargain basement values. And again, those are like longer term trades as well. I just don't have any cash that I want to commit to it. I don't have the cash to commit to it right now. So I'm saying no. Until I trim some profits from other positions. Perhaps SOL pounce back up, you know, around the $300 range. I might trim a little bit. I might trim a little bit of SOL, take that money, apply it to some Tilray, apply to, and that is the whole point. So again, have a plan, know what type of trader you are. If you're a new trader, be careful of these markets. They can be very risky right now, especially now. Go in very lightly if you're a new trader and try and figure out what type of trader you are. You're going to fail a lot more than you're going to succeed if you're a new trader, okay? Just consider it your tuition. Consider it your money that you're putting to learn about. That's what I did in 2008. I got in at the MBS crisis. I got in at the top at 2008. 2008, man, I used to watch Kramer. I was like, oh yeah, I'm ready to go. I know everything about trading. It wasn't until after the market had crashed from the MBS crisis where I was left holding a third of the amount that I'd started with that I said, wait a second. I just paid for a great education. I just turned it around and went optimistic mode. And I said, you know what? I just paid for my education. I just paid for, and I bought many, many books. I read many, many books. Maybe we'll talk about the books that I've read along the way, becoming a trader. And so I'm seasoned now. So when I see these dips on Invitae, when I see these dips on CLSK, when I see these dips on Cardano, right? I don't freak out anymore. I don't freak out. I just zoom out. I stick with the plan, and I don't freak out because I was in one of the worst. We could have another crash even worse than the MBS crisis. That's still on the table right now. When you're, be careful. Understand that if you think that nothing can go lower, you're dead wrong. If you think nothing can go higher, you're dead wrong. Things have gone higher when people were like, I don't think it could get higher, and it has spiked up way past it. Because of valuation, because people didn't realize the worth of something. And the RSI looks like ridiculous. The MACD looks ridiculous. Crazy things you never think would happen because people didn't value it correctly. Same thing on the downside. These things can happen all the time. Technical analysis just gives you like a roadmap. Kind of gives you like a little bit more footing, than you normally would have just going in blind saying, oh, I'm going to buy it here because it looks cheap. Don't ever do that. Research everything. Research the valuation of these things. Research, if you're in crypto, research the tokenomics. Research the blockchain. What does it do? What is utility? Okay. You have to question all these things. There's plenty of crypto out there that's bullshit. Plenty out there that's bullshit. 90% of crypto, that's lowballing the number, is bullshit. Okay. There are now crypto that are involved with blockchains that have utility that means something. And everything that you're seeing right here, these positions that I am in crypto, all these blockchains do something. All of them have a utility. All of them have a reason for existing that are useful, that will continue to be useful, that will build value over time. All of them. We can go through a bear market. We could see 80% taken off, 9% of these taken off. I'm completely confident in the long term that there is so much use for these that it will get out of that rut eventually, if that's what happens. So know what you're in and continue to stay up to date on it. Continue every once in a while to look at what it is that you're invested in to make sure that your thesis holds water. Because if it doesn't, your thesis changes. Then you have to question the trades that you're in. You have to do that. You have to do that as a trader. Something changes. I got out of ADA because I saw that Charles Hoskinson didn't really have anything back there in terms of his DEXs and his DApps that were ready to go and live online. And I said, you know what? A lot of these people that are saying that the ecosystem isn't there because these aren't online right now, whereas Solana is and Luna is and all these other blockchains right now have all this total value locked. And I said, okay, you know what? There's my thesis changed, and I got out. But then I see the long-term value in it, and I saw this spike, and I got trapped back up here at 223. See what happened to me? I didn't take my own advice. Then I had to dollar cost average my way down. And the reason why I'm stuck in this trade on ADA is because I see the long-term utility, but my timing is completely off. My timing was completely off. But on the technical analysis side, I did see a break of this bearish side, and I said, wow, that is a significant spike from this. Look right here. See this line right here? And the reason I hop back in, and I got burned because this happens all the time. Don't think it can't happen to you. All right. This line right here. Okay. So as a technical analysis guy, I saw it break convincingly past this. And at the time, there was no other bearish channel here. There was no other bearish trend. And I saw it break significantly. And I was like, okay, yeah. And when I saw it break, I got in and I said, this thing's going to pump. Did not. It got shorted. That spike got shorted. It was a giant fake out. And when it came back down here to test, you see all this consolidation right here. It went to test this channel and it failed it. And you can see it spike up past it again and it failed it. So now we're just waiting to see if it can spike up past this. All right, guys. Wow. 1 hour and 5 minutes. I hope this was informative for you. Thank you for being a member of DG Trades. I would like to see some comments if you guys are out there. I've seen people like the video. That's cool. But I would like to see maybe a little bit more in terms of activity on the channel here. That would be nice. I feel like I'm talking to myself here. And I hope some of these opinions, not advice, sorry, the opinions are useful to you guys. So again, you're an adult, make your own mind up as far as what you are gathering from the information here, and trade smart, trade intelligent, have a plan, know what you're trading. Okay. And if you do that, most of the times you'll be fine. Thanks for watching here on DG Trades. I will see you on the next vid.